Hey guys, Dennis Wilburn, the Active Trend Trader. Yeah, that white stuff on the ground is not the white sands of a beach in Hawaii. I want to welcome you to today's session of how to make money trading stocks. I've got 4 stocks we're going to be doing rapid fire review on, plus our 3 indexes. You're going to want to stay tuned to the end of how to make money trading stocks, because I have a very special tip that will help you do your planning both monthly and yearly. Aloha. Hey traders, as I said in the intro, I've got 4 great stocks to do a rapid fire review on, plus our analysis, and if you'll hold on to the end, I've got a trading tip that will help you be more patient in waiting for your setups going into 2022. But first, hey, do you struggle with any of these? I bet you do, because I know I did when I first got started trading. Well, if this sounds familiar, AutoPilot Trading is for you. You get some really great stuff through the week, and plus a video that shows exactly how to use the checklist that we put out on every weekend, with up to 7 trade setups every weekend. It's a trading routine with a targeted consistency with index beating returns. AutoPilot Trading. But I also want to remind you, we're having a 25% off end of year sale that you want to take advantage of. And you can actually take it for a test flight. 3 months for only $237. And remember, this special ends January 4th. So let's go ahead and jump into today's session. As I like to use Tom Sosnoff. Tom Sosnoff is a really great trader, and he highlights this: wealth creation is a derivative of mechanically addressing opportunities. What Tom's talking about there is he talked about setting up some kind of a swing trading system based on mechanical rules to get yourself in and out of trades. That's exactly what we provide with the active trend trading system. I want to, as a reminder, that all the materials that we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. As you see, 2021, in a way, I'm really glad that it's over. We were profitable for the year, a little bit over 30%. Matter of fact, a little bit, as it says here, 32.45% was where we were last week. How do we finish up this week? At 33%. How do we compare the S&P? 6.39% overall. So we beat the S&P again. That makes 10 years in a row the active trend trading system has beat the S&P. And it's kind of interesting. I was taking a look at the averages. The average that the active trend trading beat the S&P with is we've averaged 36% over the last 10 years. The S&P has averaged only 16.9% over the past 10 years. So I'm really pleased that we've shown a lot of consistency over the years, and so we'll continue to look for that consistency. So let's go ahead and jump into the charts for this weekend, and we'll get started with the S&P. I would have to say that all the indexes was a little bit of great rally on Monday, and then it kind of just like watching the air come out of a tire, a flat tire. Just basically kind of a slow, if you can hear that, through the rest of the week. Did we get all the way back to the breakout area? No. How does that set us up for next week? Well, the momentum looks like it's turning over. However, don't mistake this for also, this could be a momentum squeeze. We've still got this trend line going there. And as long as that momentum trend line remains intact and is not broken, we'll look to trade this to the upside. Look for a pullback back either to the breakout area or perhaps down here to the 820 moving average. What are we looking at? On the weekly? Yeah, the momentum TSI pointed down, but trying to get, go back up. Same thing in market forecast, stayed above the 80 line, which is considered a bullish type of move. As most of you know, that I like to trade the NASDAQ and or the IWM. So what about the NASDAQ? Again, today's today's price action, I would have to say it's a little bit weak. The move up, excuse me, on the NASDAQ, we moved all the way up to this area here. Here was the breakout on Monday. Well, what's happening here? It is showing up weaker than the S&P. We have broken back below the breakout area, and we're heading back down towards perhaps back down to the 20. TSI looking to be wanting to cross down. Hasn't turned over totally yet, but we will watch this. The price action on the Qs did not bust out and break out like the S&P did. What are we looking at on the TSI, or correction, on the weeklies? Let me get that pulled back over. There we go. On the weeklies, a little bit of a, back up into resistance, and then we're kind of rolling down. As we said, the gap up, or the breakout on Monday, we basically covered that whole candlestick. And so I think the downside is back in play going into next week. The Russell actually held up a lot better than the Qs, the NASDAQ. We broke up off of this low here. We actually traded this in the AutoPilot Trading ETF trades. We jumped in down here on the TNA portion of this and actually wrote it up and took out up to a 20% gain. Now we're just hanging on to the rest of it with a 12.5% trailing stop. So nice profits going into the end of the year. Again, it's looking like, as we look here, you see the long tails on top of the candlesticks. That's showing us that sellers are coming in. And where are sellers coming in at? Well, as we like to say, look to your left. Well, sellers are coming in right here. See here? This is past resistance where the prices broke down from again. Same. Gets up into that area. Prices break down and are starting to roll back over. Now, the one thing that is a positive on the Russell is that we have not broken back down below the 820. We break that down below the 820, but at the same time, the negative side of that is we are closing below the 50. So if we get a close below the 820, watch for us to continue to process on down. There's a 50% retracement. And then watch for the 618 retracement, or even the 78% retracement. We may get a bounce all the way back into here. With the type of market that we're currently experiencing, where we're having a difficult time getting traction, watch for it to move into a sideways move. It did that since January on the Russell, so don't be surprised to see it repeat that action. If it does, it will give us tremendous opportunities for really quick swing trades, buying at the bottom, selling as it gets back up to the resistance area. And then if you want to, you can trade either options and or TZA to trade when it reverses and heads back down. TZA, of course, is the inverse leverage ETF on the Russell. So what else do we have going on here? We've got, here are the stocks that I'm looking at going into this week. One of the areas I like to keep in mind is I want to always have a corral of thoroughbred stocks to go to. I utilize one is stocks that quarterly have quarterly earnings and also demonstrate the personality that they move on going into earnings, somewhere between the 4 to 8 weeks before earnings that they typically run up. What am I looking for on those particular trades? I'm looking for about 5 to 10% on the stock itself going into earnings, and I will basically be after I take off that profit, I get out of the position. I do not hold over earnings. One of the stocks in our earnings corral is JP Morgan. And JP Morgan has done a very nice pullback into support. As you see here, it has earnings coming up when? Earnings coming up on 114. So we're about 2 weeks out from earnings, and that's actually pretty good timing for when you expect it to move up. Note, though, that we are in a downtrend. Excuse me. Price action may revert and fall back down, so it may be about a week or so before we can pick up and may get a rally into earnings. But I'll be watching JPM on a pullback back down into somewhere between, I'd say 155 all the way down to 152. And so one could, if they wanted to, go ahead and just lay in an order down here, and that way you could get some intraday action. And if it was very volatile, come down here, pick up the order. My stop loss would be about 10 cents below that low there, and that low there is 151.84. So that's JP Morgan. It looks pretty good to the upside, especially on the weekly momentums indicators. It looks like it wants to turn up and head up. Mara is a stock I covered midweek. Okay, the reason I am leaving Mara on the list is because it is coming back down to retest back into the level where we have past support. You just draw a line across there. There's past support in that area. As you see across there. We have a 3-line cluster on the market forecast. And typically, when you get a 3-line cluster, what does that mean? That means between 1 and 4 trading periods, in this case a day, there tends to be a reversal and a move back up to the upside. The interesting thing about it, and then the second thing is I have positive divergence going on the TSI. So even though my price action may be seeking lower lows, momentum is not seeking lower lows. That can oftentimes be indicative of a setup to the upside once we get a reversal candlestick. And so I'll be watching my low here, which is 31.45. That's one of my areas I'm going to be looking at. And then I could also slip just a little bit lower than that to about $30, $29.95, somewhere in there. And I would like to see a strong candlestick reversal, but we'll keep that in mind going forward. So it's Mara, and that's for Marathon. It is on my list to watch. Dick's Sporting Goods is back in the news. Made some really good money on Dick's this past year. We basically have come down here to $100 and bounced back up to $114. So it's picked up about a 14% gain from the lows down here. I'm looking for a pullback back into the moving averages, the 820 level in here. The market forecast longer term has just turned up. The TSI has just turned up, and look what's happening over on the weeklies. The weekly TSI looks like it wants to pick back up. This is almost a morning star type of formation, but we are moving back up. Need to break out of the moving averages there at the 116 level. That happens to coincide with what? The 50-day moving average. Oftentimes what we'll see in this type of a move, we'll see the first rally attempt, pow, retrace to what we like to see is retrace to a higher low and then a bounce. And that's our trigger to jump back in. Occasionally, it turns out to be we have positive divergence here. We get a retest that actually drops a little bit lower. And that is also a very strong signal as long as our TSI or momentum is continuing to head up, and then it bounces from there. So that's what we're looking at for DIX. And so CF. I like the, and CF, of course, this is the CF Industries. Had a great breakout a little bit earlier. We are pulling back towards the breakout area to test it. What I'll be looking for is, as you can see, momentum has shifted to the downside. So how far are we going to fall? Are we going to fall just to the breakout area, or are we going to overshoot that down to this next breakout area? I like, especially in the current market conditions, dropping down to the $66 level. But I'll be watching that nonetheless. Somewhere in that zone, the $66 level, we'll put it right on top of the 34-day moving average, and that would be an ideal place for it to get a bounce and take off from there. When we have earnings coming up, we have earnings coming up on 2/16. So this is another one of those that we're a month and a half away from earnings. So that could very well lend itself for a potential earnings trade moving forward. So let's just watch and see what takes place from there. Let's see. Okay. Again, if you've hung with us, I really appreciate it. I want to remind you, if it's the first time joining us on YouTube, hey, subscribe, hit the bell. Engage in some comments, engage in basically some discussion about what's going on in the market, what you're trading, how'd you do in 2021 with your trading, what will you be looking to change about your trading so you can become a better routine and have a better, more consistency in your trading. I almost forgot the tip for this week. The tip for this week is, at the beginning or the ending of every month, and also going into the new year, new quarter, and this type of thing, always check out to see what kind of signals that you may be getting off of the monthly chart. I'm going to go ahead and remove that. And as you see here, the monthly chart will oftentimes reveal strong levels of support that may or may not show up on a daily and a monthly basis. And if we just make a real quick run, I am not going to spend a lot of time on it, but let's just make a real quick run back through the stocks that we took a look at. DIX Sporting Goods. What's the monthly chart telling us about DIX? Aha! Finished up with a nice hammer. So that whole lower wick on that hammer on the weekly chart, or correction, on the monthly chart, that's a zone of support with a strong support where at about 108.69 to 108.50. Mara. Same. Now Mara on the other side. Okay, this looks a little bit more wimpy, or a little like it could head back down. It is I would call this an evening star, which is a bearish reversal signal. And again, if I were just looking on the weekly and the daily, I would not see this. And so what am I looking at? We may get a push back up towards about the $42 level, like it did earlier this week. But this is telling us that that's some pretty strong overhead resistance. And so, yes, you could trade it to the upside, but if you get up in that range, that's where you may want to take some profits. JP Morgan? What's JP Morgan telling us on a monthly chart? Again, we have come back down and retested. Buyers basically, after this initial sell-off at the beginning of the month, buyers came back in, are starting to push it back up. We'll see if that continues. Momentum, TSI pointing down, and the market forecast heading sideways. So the other thing that we can pick up from the monthly charts is when you get these momentum indicators in the lower level and they start to bend up, that is oftentimes indicative of a setup for a very strong move to the upside that we can be ready for. That's why we encourage, check your monthly charts at least, once a month, and the beginning and the end of the month is the best time for that. So, hey, thanks for joining us today. I want to remind you that, hey, 2021, we were looking at being consistent, disciplined, and building wealth. We're going to look at doing more of the same in 2022. I want to wish everybody a happy new year. And I want to just say from the bottom of my heart, thank you so much for supporting us at Active Trend Trading, and also How to Make Money Trading Stocks webinar that we do every Friday. We'll be live again next week. And if you like some of the changes we're making so where we can get more stocks and do them more rapidly, please leave a comment. Let me know. And again, remember, if you're looking to for AutoPilot, don't miss the opportunity to get into on the sale, save 25%. So until later, aloha and God bless everybody.